CJ King here, and today I'm joined by serial entrepreneur and businessman Richard Carthon. It's a pleasure having you on the show, brother.
Appreciate it, man. Glad to be here.
And today we have a special treat for you. Richard and we're going to be talking to you how to build wealth, and specifically through investing in cryptocurrency. So if you're interested in learning how to build wealth through cryptocurrency, you're going to want to check out this video. I promise it's going to be very informative. So with that being said, let's get started. So Richard, tell me about yourself. What is your story and who are you, so that people can know?
For sure. All right. So my name is Richard Carthon. I am currently living in New Orleans, Louisiana.
Mm-hmm.
I went to Tulane University on a dual sport athletic scholarship. I played both Division I football and baseball. And while I was in school, I was studying business. I did legal studies in business with business management, and I did like a specialization in entrepreneurship and energy. Now, I was originally planning to go to law school, but that plan got averted because my junior and my senior year, I started really getting into entrepreneurship. So I was in tech. I wanted to learn how to build apps, and actually one of the first businesses I ever started was a website, which was learning how to start the conversation of whether or not someone should be able to promote bigger issues that are happening in the country. Now, ultimately, that website didn't go off and do anything, but from that, I learned how to build websites. Right. And then from that, I was talking with some of my business fraternity brothers. So I was in the business fraternity, Alpha Kappa Psi, and one of them came up to me and was like, "Hey, we know you're good with marketing and advertising, and we really want you to help us promote this app that we're trying to build." I'm like, "Okay, cool." So it was called Bragon, and the whole purpose and premise of it was you got this great shirt, it's usually $100, but you just got for 20. If I gotta go back to your boys, hey, I just got come up. So right. The whole purpose of it was to tell people hey, this is where I got this great deal.
Put them on.
Right, put them on. So ultimately, the app failed, needless to say. But from that experience, I learned how to build an app. Right, so. Right. How do you make wireframes? How do you get a development team overseas? How do you budget?
You're learning more from failure than you ever can from success.
100%. So with that experience, I then got really excited about another idea that was called Follow My Cow. So going into my senior year of college, at one of the meetings at Alpha Kappa Psi, each week we would have a brother that would come up and challenge us to come up with a new idea. Or that would challenge us each week to do something. And so this week, the brother stood up and was like, "Hey, I challenge all the entrepreneurial spirits in here to come up with a brand new idea every day for a month." So I said, "All right, bet." So on the 10th day, I came up with Follow My Cow, which was, the whole premise was that I was in 5 organizations on campus. I was a dual sport athlete. I live on my calendar. If not, my calendar doesn't exist. So how could you consolidate this information? So I decided that I was going to build it. So fast forward. Now, I just graduated and I have successfully fundraised money to build this app and to get it going. And so I can either go to law school or I can try to be an entrepreneur and build this thing. So I picked the latter. I decided not to law school.
I did.
And through that, the first thing that I did was I was a waiter at this restaurant called Commander's Palace, and I worked there for about a month. I was like, I didn't go to school for this, and so I ended up getting a job with Merrill Lynch, which is wealth management, wealth advisory. And so I started getting very well knowledge in how to build wealth, how to handle a significant amount of money, make money on top of money, and how to financially educate people. And so during that process, I was still building my apps, learning all this information, and I came to a point where I was like, okay, I can't do both. So I'm either gonna go full out, I'm trying to build this app, or I'm gonna go do wealth management. So I decided that, hey, I'm young, now's the time, I'm just gonna make the leap. I can always go back into corporate America. So I made the leap, and I did full entrepreneurship, doing Follow My Cow full time. So we fast forward another year. I was able to raise some more money. I was able to launch the app and get all that going. But then I hit this crucible where I was going to run out of money. So I was like, okay, I can either let this die or I can go get a job real quick and just keep the ball rolling so I can learn some other things.
What'd you do?
So I decided not to let it die, and I went and got a job and had an opportunity to get a job with a company called Rasa. So it is an artificial intelligence company that works with large associations. And basically what they do is they make emails for these huge organizations. So let's say you have 50,000 people in your organization. So instead of sending the same uniform email to everyone that no one opens or reads because it's like it gets spammed by them, same old thing. It sends them personalized information that you actually care about. So it's like a Facebook feed, but like information that's relevant to you.
Right.
Correct. And so I was like, okay, I can get behind this. And so I was on the sales team, and I was also helping with some of like the marketing side, because what I really wanted to learn more this year was how to not only do like the sales and marketing, but like how to truly build all of this. Now, my very first day at this job, my boss comes up to me and says, "So, are you into crypto?" I was like, "Crypto? What is crypto?"
Right.
Right? And I'm like, he's like, "Man, cryptocurrency. Like, you need to be looking into this." And I was like, "Okay. I mean, why not? Whatever." So, this is like this first week or second week of January. I'm like, all right, let's really dive deep into this. And then since then, I really started to dive deep into it and learn a ton of information on it. And so much to the point to where me and a buddy have been able to successfully create a cryptocurrency fund in which people have put in money, and we make investments on behalf of our investors, and the fund has been very successful so far this year.
Okay.
So
we're gonna get back. We're gonna piggyback off of what that fund you guys. I didn't know about that. But okay, so let's really dive into crypto. Let's explain to the people what is crypto, because a lot of people out there, they don't understand or even know what cryptocurrency is.
right. So cryptocurrency. So first we need to break it down into even something more basic in the sense of what it's built upon. So cryptocurrency is built upon blockchain. Now, blockchain technology, on a very simple term, is a way to track something from start to finish. So like ledgers, right? So each time a block is built, it is like a permanent way to go back and see like this is where everything came from. So the way that you can imagine this is that looking into blockchain technology, just to give 3 quick examples. One, Walmart. Walmart is using blockchain technology to keep track of their inventory. So if they need to know how much fish they have or whatever it is, they can follow that entire blockchain and see where everything has been going, and so it's seamless and it's way less overhead and having to worry about like keeping track of everything.
Right.
So that is what blockchain is being used for. And getting back to crypto, so cryptocurrency right now is the way that money is being transferred through blockchain.
Okay.
So cryptocurrency is a way to exchange money or something of value to someone else, and do it built on blockchain in a very quick way.
Okay. So why do you think cryptocurrency is a worthy investment to add to someone's portfolio?
The reason why cryptocurrency is, you need to be getting into it, and you need to look into it, and you should start learning as much as you can, is because the same way our parents wish they could have bought Apple when it first came out, when Facebook first came out,
Amazon
first came out, Amazon first came out, that is the cryptocurrency wave. I'm not gonna lie to you in the way where I see cryptocurrency is a very highly speculative place. So only about 5% of it is actual factual, like perceived, actual value that can be traced and gone. 95% of it is speculative and is still yet to be seen if there can be something that is actually there. But the reason why you should get into it is because the same way when these social networks came out, right? There's a ton that came out. You had, the MySpace, you had Facebook, you had some other.
Throw it back for you.
Right. all these different like social media platforms that came out, but then they all kind of settled down, and now we have this giant that's worth a ton of money.
Right.
The same way the .com bubble, when all these websites started coming out, and then it burst, and then only a couple stood the test of time, and now they've been built upon. Cryptocurrency is in its infancy, and it's been out since 2013. And since then, it's skyrocketed. In 2013, if you put in $100, I think think it's worth somewhere between. I think it's worth about $9 million.
Yeah, because I know when I was in high school and I graduated, Bitcoin came out in 2010.
Mm-hmm.
That's when it first, got its introduction. And I was thinking to myself, like a year or two ago, man, if I would have put in just $100 back when I was a senior in high school, because I don't know how many times I got hundreds of dollars, thousands of dollars throughout my early 20s, and I wasted it on what? Clothes I don't even wear no more, shoes that I gave away, stuff, and I'm sitting here and, 2 years ago, I'm saying, man, these people in Bitcoin made a bunch of random people millionaires just because they invested, and got into this wave, like we said, when it was really, really early.
Right. First movers. And right now it's still a first movers area. We haven't gotten into the secondary of people moving into it. It's still early. Now the challenge with it, the way I look at it is...
I don't mean to cut you off, Richard, but we're going to take a quick break right quick. And
I believe it was something along the line of going back to cryptocurrency and how it's speculative. The way I look at it, it's going to go one of two ways. Cryptocurrency is either going to bust and go to nothing, or it is going to be huge. Right, I really don't feel there's going to be an in between. It's either here to stay and going to grow exponentially, or it is going to crumble and fall. And that's probably going to be, it's going to reveal itself probably within the next 2 to 3 years. Now, the reason why I'm confident it's going to stay is going back to the core of how cryptocurrency is built, is blockchain. When you have Amazon putting billions of dollars into blockchain, IBM putting billions of dollars in the blockchain, Facebook having $1 billion blockchain team and potentially trying to come up with an ICO, which is an initial coin offering.
Okay.
It's hard to say that cryptocurrency is just going to disappear.
Right, because all these major companies who are earning billions of dollars a year are putting billions of dollars into it to keep it alive.
Absolutely, and they're trying to find out how eventually can they start profiting into this new frontier of opportunity. Even talking about the market cap right now. So
which is at 39 billion right now. So just for y'all to know that.
It's 309 billion?
I'm sorry, I say 39. It's 350 billion.
350 billion, all good. So, and just to show how strong that is, it's they think we should say, I should preface this by people that are in this industry and looking at what the market cap could be. They think by the end of this year, it could be anywhere from 800 million to 1.2 trillion, if not by the end of this year, the next year or two. And it could double a year or two after that, so it can just keep growing. And why that's important is because with the market cap being where it is now, everything as we're looking at it is quote unquote cheap. Right. So right now, I think a Bitcoin is going for roughly, let's call it $7,500. Right. If that market cap grows to that capacity, that means Bitcoin could be worth anywhere from 20 to 30,000 each. So not to say that you need to go buy a Bitcoin. There's several other coins that are available on the market, but just to show how fast this can grow in this highly volatile market, there's so much money that can be made very, very quickly.
Right, because I was reading an article a while back, and it said that the CEO of Tesla, Elon Musk, he said that you can actually buy a Tesla with Bitcoin.
Right. So
the fact that he himself is willing to put his company on the line, the value of his company on the line to be able to take payment by Bitcoin shows how much that these major companies are backing it.
For sure, and there's all kinds of things that are coming out that you can pay with these cryptocurrencies. There's actually a cafe here in New Orleans that has a Bitcoin and / cryptocurrency ATM, which is pretty insane. So like it's about to be mainstream. It's only a matter of time.
Okay. Okay. So the next question I got for you, Richard, is what are the top cryptocurrencies that you say it would be worth looking into to add to someone's portfolio?
Sure. And before I answer this, I must say that I'm not a financial advisor, and this is not financial advice. Full disclaimer there. But ones that I am looking at, the biggest one I would look into is Ethereum. So Ethereum is like the second largest coin in the market right now. So it's Bitcoin. Well, I guess technically the four big ones right now are Bitcoin, Bitcoin Cash, Ethereum, and Litecoin.
Okay.
So the reason why I would look into Ethereum is because most of these altcoins. So altcoins are coins that aren't one of these big four.
Right.
So a lot of these altcoins that are being built upon Ethereum's platform. So Ethereum is giving other companies and people that are getting into the crypto space a way to quickly be able to make a currency using their algorithms and using their platform. So why that's important is that just arbitrarily by building other coins on top of your system, it's going to have to appreciate over time. So appreciate just means it's going to have to gain value over time.
Okay.
And the more that these coins, these altcoins gain value, it's going to just keep gaining value as well. And itself is a very fast coin of transfer. So you can transfer your money very, very quickly using this digital currency, which is amazing to see. So I would look into Ethereum, and then also there's just, not to get too deep into it, but there's this thing called sharding that's coming out soon.
Okay.
And what happens right now is like mining. So if you've heard of these Bitcoin miners, these Ethereum miners, all of this information, what is happening is that in the crypto space, there is a certain amount of coins that can be made in existence, right? So with companies, so going into like the stock market, when Facebook came out and made an IPO, initial public offering, it issued a certain amount of shares.
Right.
So if they want to, they can double those shares, they can cut those shares in half, like they can vote and do whatever they want. However, in the crypto space, once those declared coins are put into existence, that's it.
That's all they got.
That's all they got. So what you can do is that you can mine for some of these coins. So you make these really hard, complex algorithms. You have these computers, machines that are just doing these complex things in the background, and you're building upon these blockchains. So every time that you build an entire block, you get a coin. So for Ethereum, sharding is basically like a mining of sorts.
Okay.
And every time that you build one, I think you get 3. So there's this new program that's coming out, I believe that's called Casper. And what it's going to allow you to do is speed up that process. So instead of every time that you get an entire coin from mining or from sharding, you're going to get 0.8.
So when you're doing this process, that you doing this yourself, or is somebody like a team, way off in California is doing it for you,
Right.
or the computer's doing it for you?
So mining, you're letting computers do it. You're setting it up and you're letting the computers go to work. So you're going to need someone that you're going to have to do some research and find out like how to set it up. It's going to suck up a ton of energy, so you're going to have to like weigh, is it worth how much money I'm going to be spending on my energy as opposed to how much money I can make from doing this.
Right.
So that's one big thing. That's why a lot of countries, foreign countries, are getting into mining, because the energy cost is so cheap that it makes sense to put all these mine rigs together and just mine for all of these coins. So it's definitely still a big opportunity. But the other side of just going back to Casper real quick, it's going to go from, you get 3 Ethereum for every entire blockchain mined, right?
Okay.
So it's going to drop down to 0.8. So at that point, it has no choice but to appreciate value. To make up for that lost amount of effort that you're going to do to just go from getting 3 to getting 0.8, the value has to go up. So whenever this process officially goes through at some point, that means that it should follow suit, and the value of it should increase significantly.
Okay.
So that's another reason I would look into Ethereum. But of course, do your own research, keep looking into that.
Right.
And then the one other coin I would look into is EOS.
Okay.
And the reason I would look into EOS is because the team that's behind EOS is putting a lot of solid foundation into the project and what they're trying to do, and the value of it just keeps going. Like it's pretty fluent in how it has been increasing, and I see it's going to, I think right now it's worth about $14, and a couple of days ago it was worth like 12.
Right.
But it's still just been a appreciating. So those are the two I keep an eye out on.
Okay, well, what about Bitcoin itself? Because I relate Bitcoin to being, the giant. Because Bitcoin started it all, So I relate Bitcoin to being like the Facebook of the group.
Right.
So do you think if Bitcoin is here to stay, or do you think these other what did you call them? Other altcoins. Do you think these altcoins are going to potentially be better than Bitcoin, and Bitcoin can lose to them, or?
Right. So the challenge with Bitcoin, Bitcoin, of course, is, if we're going to just to equate it to something to relate it, make more sense. Bitcoin is like the gold standard of the coin systems, right? So right now everything's pretty tied together in the price of Bitcoin. When Bitcoin goes up, pretty much everything else goes up. Bitcoin goes down, pretty much everything goes down. So there will be a shift to where that won't continue to happen.
Mm-hmm.
Don't know how far we are away from that, but that's kind of where it's going. Bitcoin, I would look into it. The challenge with Bitcoin is that even though I say now's a cheap time to get it, it's still, to buy one is $7,500 to have one.
It's fairly expensive just to get into Bitcoin.
Exactly. So if you're trying to buy an entire coin, which you don't have to buy an entire coin to do that, and I'm sure we'll get into that a little bit later,
right.
But you don't have to, it gets really pricey if you're trying to buy a lot of a coin, especially like Bitcoin.
Okay. Well, so let me ask you about Ripple.
Sure.
What is Ripple and what happened to it?
So Ripple is an altcoin, and it is tied to, the coin itself is XRP. So Ripple is a company that is trying to, so let's take 2 steps back.
Okay.
So cryptocurrency is decentralized, right? So
Mm-hmm.
that means it's tied to no bank. That means that there is, other than just the people and players that are in the place that are exchanging these different cryptocurrencies, there's no higher power to say you need to do X, Y, Z.
Right.
So what Ripple, or the company Ripple, is trying to do is they're trying to make it so centralized companies such as these big banks can come into the cryptocurrency space.
So they're trying to regulate it. Ripple's trying to regulate it.
In a way.
Okay.
They're trying to be the first movers in the space to bring some centralization to the decentralization.
Okay.
And the challenge with XRP is that everything that Ripple is doing.
Let's take a break real quick, Richard. We'll get right back to it.
All right.
Ripple. Okay. And the decentralization of what Ripple is trying to do. How they're trying to regulate it.
Well, yeah, so they're trying to bring some centralization to the decentralization of cryptocurrency.
Mm-hmm.
So they have quite a few projects that are in motion that are going to be bringing some of these bigger banks into play so they can find out how to get into the space. Now, the challenge with that is that when they make their coin XRP, they are having a challenge of figuring out how to correlate with what they're doing with the banks
Mm-hmm.
with their coin, and having that value seamlessly correlate. If they're able to successfully do that, XRP can significantly increase and be worth quite a bit.
Okay.
But if they're not able to do it, then of course it's probably just going to maintain its current price and maybe go lower. I think currently it's worth about 65 cents. But if they are successfully able to figure this out,
Mm-hmm.
it should be worth way more.
Right.
Another one to potentially look out for.
Okay. Okay. So let's move on. Since you are invested into crypto, can you explain how investing in crypto has changed your life?
Yes. So one being that I didn't think I'd be in this space.
Mm-hmm.
Just from going from a conversation with a colleague to now having my own fund that has had some success and is continuing to grow, and putting some different things in motion to hopefully host a conference at some point
Mm-hmm.
here in New Orleans about cryptocurrency. But the way that it's changed more than anything, it's that it's given me a way to acquire a significant amount of wealth a lot faster than I otherwise would have known. So the challenge with that, of course, is that you can't predict the market. You don't know how things are going to go. But if you educate yourself on how to make investments, especially in this space, there's a lot of money to be made. And not only have I started to see some success with this, but there are plenty of other people in the space that are either on YouTube or writing blog posts XYZ on how a bunch of millennials are becoming, getting millionaires, like making 6 figures in a week and like just killing it.
Our age.
Our age. Like, and
I'm 26.
Youngest person I know, I'm 24. I know there's this guy I saw online, I think that's either 21 or 22, that's like already close to being a millionaire, just from trading this stuff. And I know another guy that's 27 that I believe last year made $19 million from trading.
So with that being said, guys, building wealth is possible if you can be a millionaire in your 20s. It's not an unachievable goal. Like my colleague Richard is saying, there's kids all over across the country in their young 20s, younger than us, that are close to making their millions by getting involved in investing in cryptocurrency because they do their research and they're learning about it.
Right.
Having conversations like the ones we're having now.
Absolutely. And the challenge with something new, with anything that has to do with either investments or being part of a new wave, is that people, one, are afraid of change and don't like change.
Right.
And two, if you don't know about something, it makes you arbitrarily just uncomfortable. So embrace being a little bit uncomfortable and educate yourself. The more that you can educate yourself about cryptocurrency or just investments in general, the better off you're going to be, and the faster you're going to be able to turn just a little bit of money that you put on the side and have it 5x, 10x, 20x, and over time you're going to start seeing your money compound. So one of the things I would really encourage everyone watching this to do is the same way that you budget out some different things, whether it be going out to eat, buying a new pair of shoes, purse, whatever it is. Instead of spending that extra $1,500, take that money and invest it into crypto. And there's a couple ways that you can do that.
Right, we're gonna get into that. But I got two part. One is crypto is only for the U.S. thing, or is it national? Or is it globally?
So cryptocurrency is international. So to give a quick example of like how fast money can be transferred and how many people are getting into this. So I believe back in March, there was one of the biggest and fastest transactions in history. So there was 42 or 44, somewhere in there, $1 million of Litecoin, which is another one of the coins I was talking about. That was transferred to someone else, and it took, I believe, a couple hours, and it cost, I think, 36 cents.
Wow.
Now, with our centralized banks, it would have...
That would have cost millions.
Not necessarily millions, but it would have cost way more, and it would have took a ton more time as well. Probably would have took a couple of days.
Right.
So just to show you the speed and like how affordable it is to like make those transactions, that's what's good. Now the challenge with it is that what could have went wrong was that when you send a one of these coins or one of these transactions to someone, there's this long, I believe 26 character long ledger of where you're going to be sending and receiving.
Okay.
So if you mess up one letter, number, anything, you then sent it to the wrong person.
Right.
At that point, once you have sent it, you can't get it back. That's the part of the decentralization. So with a bank, if you somehow mess up a number or wire, you can call them up and be like, hey, I messed this up. And that's the reason why they usually take a couple of days or whatever, just in case you mess up, you can fix it and everything's cool. However, in crypto, you mess up.
That's you.
That's
on you.
That's on you. So that's why in a lot of ways, if you're looking at some of these ICOs that are coming out, so initial coin offerings for some of these altcoins that I was talking about earlier, the reason why Google, Bing, Facebook, Twitter, they stopped putting advertisements for crypto was because that scammers and frauds would go in, and if they see these initial coin offerings, they would make an ad for a couple $100,000 or $100 or thousands of dollars, and they would literally go to that ICO page where you're going to try to like put your money in,
Right.
and they would have it be the exact same but change everything but the last number or one of those numbers.
Wow.
And so you think you're
Sending
buying it, but you're really sending it to the scammer.
Wow.
And so that's how creative some of these people have gotten. And so millions of dollars have been fraudulently given to people. So
Well, that's just like investing in the stock market. You got to do your own research because, like, you know,
Yes.
there's always going to be people that's going to want to try to take advantage of potential investors.
yes, and I'm not saying this to scare you away, and even to show you like how crazy this can be is that the SEC themselves came out with a fake ICO just to show people like, hey, this is how easily you can be scammed and bamboozled and have your money taken from you. So it's not to say that you shouldn't look into it and that there aren't safe ways to get into the space, but don't just rashly throw your money at something.
Right.
You need to make sure you have your research done, you know what you're doing, and you make sound investments because you absolutely
You're playing with your money.
You're playing with
your money. You
You
know?
are. And if you don't do it right, somebody can take advantage of that.
Right. All right. So let's piggyback. The part two of the question I was going to ask you is you mentioned your fund. Let's talk more about that. Let's talk about your fund.
Sure. So the quick answer of the fund is me and my colleague Adam, we put together a cryptocurrency fund in which people were able to get an investment to us, and we added to our bigger fund. So the goal is to raise about $500,000 by July 1st.
Okay.
We're about, I believe, at roughly 230 right now, and looking to hopefully get the rest of it by July 1st. But we're going to cap it, and at that point, at the end of the year, we're going to return the investment. Whatever your percentage is of the fund, that's what you'll be getting back at the end of the year. It's a short-term fund. Most funds that you would invest in, you usually can't get your money out anywhere from 3 to 5 years. But we're making a quick short-term fund. And if you were to invest in the fund, a good year is somewhere between 6 to 12%. You have a great year, right? If you get that kind of return on your investment to your investors, they're ecstatic, right? So even right now, if you have a savings account and you just let that sit for a year, you're
only earning 1 point. If it's in a bank, you're only earning 0.01% on anything.
Exactly. That, and on your best bank, maybe 3%, right? So our thing is that, hey, you invest in the fund, we're probably going to give you 10% or better, but right in a short amount of time. And right now, our fund, I believe, is up about roughly 35%.
That's phenomenal because that's way higher than the inflation rate. Because when inflation is increasing by 3 to 4%, if you're only earning, if you're earning less than 3 to 4%, inflation is eating you alive.
Exactly. And so that's been kind of like our spiel to people is like, hey, look, we know what we're doing in this space. We've been able to turn a little bit of money into a good amount of money, and if we have more money to spend, we can make bigger investments to then make a bigger return. So that was kind of how that was set up, and we're having some success with it.
Okay. We're going to take a quick break right quick, and we're going to get back to it.
Right.
Next question is, how do I get started? How does one get started investing in cryptocurrency, and how much does one really need to start investing?
Absolutely. So there are a ton of great steps you can start doing to get started today. One of the things I will encourage, this little just shout out here, is if you go to my website, richardcarthon.com, and go to my blog section, I actually wrote an entire blog about this.
Okay.
And the first way that you can get started today is by opening up a Coinbase account. That's the first step to getting that started. And what Coinbase is it has the four main investment opportunities right now, which is Bitcoin, Bitcoin Cash, Ethereum, and Litecoin.
Right.
And that's a great way to just get your foot in the door.
Get your feet wet.
Yeah. And as far as how much money do you need to get in there, you can spend $5. You can spend 10. You can spend 100. You can put 100,000. The challenge with cryptocurrency, and one of the greatest things about it, is that you don't have to buy an entire coin to be in it. Whereas if you buy a stock, if you were to go in the stock market, you want to buy one share of Netflix for like $200 some. You have to buy that entire stock to have one share. Whereas you can buy a section of a Bitcoin, or if you want to put in $100 worth of Bitcoin, you can do that right now. And on 0.000 whatever of what that makes.
Right.
But either way, as long as you put in money, it will still, if the market goes up, you're still making money on that money. But what I would say is that if you are going to put like not as much money, I would look into not only making a Coinbase account, but also making a Binance account.
Okay.
So Binance has altcoins on it, right?
Okay.
So talking about some of those altcoins I was talking about earlier, like EOS and Ripple, and a ton other, you can take the money that you put into Coinbase and you can transfer it over to Binance, and then you can buy those altcoins. And so one of the biggest questions you're probably gonna have is, okay, so I put in all this money, how do I take my money out and then turn it back into cash? So the way that happens is, if you take out your money from Coinbase and put it into Binance and you buy these altcoins, what you do is, after you have that altcoin, you can transfer that back into either Bitcoin, Ethereum, like there's a way to put it back into one of those coins, and then you transfer it back to Coinbase, and then once it's from Coinbase, you can take your money out.
Okay.
So Coinbase is basically, right now, it's a great way to have like a core of like, here's how I can buy some initial coins, and if I ever want to cash out, here's how I can cash out on the same place. But if you're trying to go that step further and get some of these other altcoins I'm talking about, look into Binance, and you're going to have to learn how to transfer the coins from Coinbase to Binance. Coinbase has a tutorial on how to do that, so does Binance. I would look those up before you do this. It's not that hard. It's just something new. But once you do it once, it's a simple process. But once you figure that out, that's really all there is to it. You can start investing today and have a full portfolio of some different coins. But one of the parts I would look into it too, as you start to put in more and more money, you need a safe way to be able to put it somewhere.
Right.
So right now,
what's that called though?
So it's called a cold wallet.
Cold wallet.
So when you have it in Coinbase, or if you have it in Binance, that is
Okay.
a hot wallet. That means at any point, if you want to make a trade, or if you want to transfer it somewhere else, or you want to buy more, it's right there sitting there waiting, and you can instantly do stuff with it. A cold wallet is just like having it the same way that you have a wallet in your back pocket right now, or if you have it in your purse, same thing. You can take it out and no one can take that. So if you had, for example, 100 Bitcoin, right? You probably wouldn't want that on the market. Someone's going to try to come take that.
Right.
They're going to try to come find your account. They're going to try to take it from you. You would take it out, you put it on a cold wallet. There's quite a few out there that you can buy. And once the same way that you would transfer like your money from Coinbase to Binance, the same way you would transfer it to this cold wallet, which is basically like USB. Say that you put in like your computer, it would go in there and you take it out and you have it chilling. That money that you put on that cold wallet is like having a bank. That's like literally you going to the bank and saying, I need to take out $100,000 and have it in cold hard cash.
And is that how would you use that? That's how would you use the ATM that you mentioned earlier?
Yeah, potentially so.
Through the cold wallet?
Yeah, so actually there's, you can have some cold wallets on, well that's a cold wallet. You also can have wallets on your phone. There's some apps that are out for both Android and iPhone to where you can take off the different coins from those exchanges and put it into those wallets. And from those wallets you can start paying for those different things if it's available.
Right.
Otherwise you can just put it in the cold wallet and just let it chill. So if you're just looking at it for the long run and you're like, I want to buy these coins and I want to see what happens in the next 3 years,
You need to get a cold wallet.
get a cold wallet, put it in there, let it chill, and then don't forget where you put it.
Oh yeah, I heard you lose that password.
Yeah. Don't lose that password, don't lose your wallet. Other than that, good to go.
Right. Okay. Okay. So many people would say that investing in crypto is for the younger our generation, millennials and upcoming Gen Zers, because it's high volatility rate. So my question is, how would you advise the older generation, like our parents' generation, to get involved in cryptocurrency?
The way I would look at it is, usually when you're investing in different opportunities, you have like a spread, right? So you have a high risk spread to where you're okay with losing a certain amount of money or looking to like make a huge return. You have your mid to where you're trying to make a steady return, but make sure like it just can't be taken from you. Then you have your like super steady, like I'm not touching this. This is like my 401k. This is my retirement. It's just going to do what it does, and I'm not touching this until I'm done. So I would look to this being at the high risk, like I'm okay with putting money into this and seeing what happens. I wouldn't necessarily call it casino money, but put it that way, right?
Mm-hmm.
So I have some money that like if I lose it, I lose it. But at the same time,
You're okay with it.
I'm okay with it.
What's the word? It's called disposable income.
Right. Some disposable income, but some disposable income that could be a highly returnable investment. You know, when you go to the casino, it's not so much that it's an investment because you still have the chance of losing it, period. However, with this, yes, you still have the chance of losing it, but you also have an educated chance of it actually being returned to you, and you might not lose everything. You might, take out some, but you also can make a huge return by just putting some money into it. So like that's the way I would present it, and I would just look at it from the opportunity of like most people of our parents' generation have absolutely put investments in way not good investment opportunities and things that like didn't make sense. The only reason cryptocurrency doesn't make sense is because they don't know enough about it. They haven't done research on it.
Right.
But after they look into it and see where it's going and it makes sense, this is a solid investment to look into. Like, not for just that generation, all generations. Like, you should be in crypto.
Right. Okay, because I relate to crypto like you said it earlier. You mentioned, I'm gonna bring it back up that crypto. I relate to crypto being like the .com people like in Amazon and Google, because when they came out in the '90s, that those companies, their stock prices, they shot up fairly quickly, just like how the the cryptocurrencies market share really did. Like when Bitcoin turned a whole bunch of random people into millionaires overnight, and then you go back, look at the time, the history of Google, Amazon, and all these other companies. In the early 2000s, their stock price plummeted, right? And from then it rebounded, and now they're giants, right? And if you look at what's happening with Bitcoin and all the other shares, that's exactly what's going on with Bitcoin right now. Like it came out, in 2010 for Bitcoin, and all the other ones popped out in 2013, and and now they're their shares, went high,
right?
And then now, recently their shares have been now starting to drop, and I think they're going to continue to drop until they reach a certain level, and then it's going to steady out itself again, and then some companies are going to be here to stay.
The price will bottom out, right? So it's trying to find its new base,
right?
It's trying to find its new core. The interesting thing about Bitcoin right now is it's a timing game, right? So at the beginning or at the end of 2017, Bitcoin went on this huge bull run. So it means that it increased a ton in value. So Bitcoin was a couple $1,000s, shot up to $19,000, $20,000, right?
Right.
And then February comes and it drops down to $6,000, right?
Right.
So crazy, high volatility, but still look at it. If you're looking at it from an arbitrary rate, depending on the timing of it, if you got in to Bitcoin and you spent $1,000 and then it's still up to $6,000, are you really upset?
If you had made $1 billion, yes, you would be. But over the time period, you can clearly see I'm still well off from when I didn't start.
Exactly. And so the challenge of it is a timing thing. So right now, when I prefaced at the beginning of our conversation that right now cryptocurrency is cheap, I believe right now that cryptocurrency is cheap.
Because you only really lose money once you pull out.
Exactly. And the thing is that it's cheap in the sense that this thing is either going to go to nothing or it's going to shoot up. And right now is a prime time to get in while it is quote unquote cheap. Because if this thing does shoot up and goes to whatever, imagine trying to buy a $20,000 coin. Doesn't really make sense that you're like,
exactly.
I don't know if I want to do this.
Speculate 10 years from now, and Bitcoin is, and some of these companies are here to stay. Imagine what the market share that just to buy one coin could be. Think about it. Our generation, people, everybody today is complaining about high gas prices.
Right.
Imagine how high you think gas is going to be 10, 20 years from now.
Right. Or if it's even a thing.
Right. Even if gas is still a thing, but just picture how much the inflation is going to affect on that. So let's take a break right quick, and then we're going to get right back to the conversation. Fast money. So some people say that investing in cryptocurrency is no longer possible because the fast money is gone. So even though the fast money may be gone, do you think it's still worthwhile investing into it?
So whoever said that fast money is gone, that's just wrong
Mm-hmm.
because it depends on how you're looking at it, right? So
Because you say it's a time thing.
it's a timing thing, and it depends on what is fast. Are you day trading? Are you looking at it for a month? Are you looking at it for a year, 5 years?
So would you say it's kind of almost would you say it's almost too early to invest in?
No, right now is the time to get in, right?
Okay.
So the fast money, as far as like you get in one day and then the next day explodes by $5,000. Sure, that did just happen recently, but it could happen again.
Right.
I mean, back in February when it dropped down to 6, and then April jumped back up to 10. That's $4,000 right there. So if you got in when it hit the bottom and got back up to another top, you just made a $4,000 return based on how much money you put in.
But do you think it can go from like it did when it came out from 1,000 to 20?
Yes, it
Yeah,
can happen.
it can
It's that volatile, right? So it is all speculative, and it's all there's no way to accurately predict what is going to happen. However, there are indicators that do prove different ways that the market can move if you're watching them, right? So with my fund, that's one of the things that we do is that we watch these indicators every single day and see where the market's moving and how it's coming and going from bull to bear markets and making sure that we can adequately understand like which way the market's moving so that we can cover our costs and mitigate as much risk as we can with trading in this space. So as far as the fast money goes, now's the time.
Okay. All right. So what would you say are some pros and cons of investing in crypto?
Pros. You can significantly turn a small amount of money into a large amount of money. Con, you can also do the exact opposite. You can lose all that money very fast, depending on how you set it up.
Okay.
Pro, it's a very new market, so if you educate yourself in the space, you can be seen as a thought leader in this, and people can defer to you if they want more information on it. So the more that you can accurately describe and talk about different questions that a person has, they're probably going to come for you more answers, which then gives you a one-up / an idea of how you can be moving into this new frontier in space.
Okay.
Con is that because it's so highly speculative and people don't know can't accurately predict what's going to happen next, it is a challenging conversation because people are scared of what they don't know and scared of what they can't accurately describe, right? So that's another con of that. Another pro is that you don't have to have a ton of money to get into this opportunity, right? So usually when you want to invest in real estate, right, you have to have a good amount of money to get in there and then have all that going. If you want to invest in the stock market, you pretty much have to do the same thing to really start seeing some things happen. With crypto, you don't. You have a couple bucks you want to put in XYZ, you can do that.
Right.
The con of something like that is that if you do not invest properly and you transfer some of this stuff, you could lose your money. So overall, I think that there's way more pros and cons I could put into this, but to kind of wrap up and explain like the core of what truly needs to happen, it is a highly speculative place, but there's such a huge amount of opportunity that it's worth looking into.
Okay.
Usually you want to be risk averse with investment, you want to make sure that you don't lose everything. Don't put everything into cryptocurrency. I'm not saying, hey, if you're going to invest in this, throw all your money in this.
No.
Don't do that.
Gotta diversify.
Don't do that. But if you have some money, put it in there, and make sure you have a way to just do some first steps and put money in.
All right, because with me personally, when I'm involved in crypto, but I'm not as deeply involved in it with you as you are. I have only one coin of Litecoin, but and it's in there. I don't touch it, but I do want to add some more. Eventually. But like you're telling me now, I don't need to wait and buy a whole share of Litecoin. I can actually start with just a little money.
Right.
And build it up.
Build it up and eventually get an entire coin.
Right. Okay. So, in summary, let's tell the people some quick steps to remember on how to get started investing in crypto.
Absolutely. So first steps, get a Coinbase account. After you have your Coinbase account, it's set up. You can buy one of your first coins, whether it be Bitcoin, Ethereum, Bitcoin Cash, Litecoin, Once you have that going, if you want to go a step further, get a Binance account in which you can start getting some of the altcoins I was talking about. If you want to start getting more educated in the crypto space, so my fund is called Astra Network. If you go to astronetwork.co, that's astronetwork.co. On our homepage, we have a newsletter sign up, and also on all of our social media. We have a link to where you can sign up. We have a newsletter that comes out every single day. Going back to the artificial intelligence company I was telling you about, so we actually are working with them, and we have our own newsletter that uses that AI to send personal emails to you every single day, informing you about what is happening in cryptocurrency, what's the latest news, how can you start seeing some of the trends that are happening so that it can educate you on your next investment in the space. So I would put that as some of your first steps into truly getting into this.
Okay. Well, that's just about wraps it up there. I'm gonna tell you thank you, Richard, for coming on the show. It was really informative. I really hope you guys learned something about the basics of getting get started to investing in cryptocurrency. And I just want to say thank you, man, because I look forward to working with you and do another segment. I feel like we can make a series out of this. Wealth building for the Black community.
Absolutely, man. It's the more you can inform yourself on how to become financially literate and understand how you can build upon your wealth. You don't need a lot to get started, but you do need to know how to build on top of what you have.
Right.
And I appreciate you having me on the show, and look forward to future episodes.
Right. All right, man. This is CJ King. I'm joined here with Richard Carthon, and you're on the Black Voice. We're out.